All right, everybody. Default is an extremely important um, safety measure for a private money lender. And today we're going to talk about it. My name is Rich Lennon. We talk about growing the money every morning. And specifically, I like to talk about how to be a private money lender. I really like to get 30 to 50% on my fractionalized notes. And I just come here and teach everybody how to do it because I don't know, no one else is. All right, let's talk about default. A default is a official term. It's a legal term inside your note and deed of trust, and the term is when you have done something to violate the terms and conditions of said note and deed of trust. Now, I am a huge proponent of property rights. If I own the property, it's my property, and I don't want my lender to come out and tell me what to do. So that's extremely important. So the default doesn't just give you carte blanche about what you can do about a property. A property owner still has a lot of rights in these situations, but in a situation where you need to go get your money back, or you need to go, for lack of a better term, you need to kind of rein that borrower in a little bit. Maybe they've kind of gone overboard and they're doing things that you're not happy with. The default is a important tool to be able to get control of your property back. And I like to make my terms 6 months for this exact reason. Because if you lend somebody money and they don't violate any of the terms, the conditions of your deal or your loan, then you can't go get the property back. And let's use an example of, let's say that you lend somebody the money and then they go make a meth house in you out of your house. That's a really, really bad day, by the way. But if they're meeting all the terms and conditions of your note and deed of trust, it might not be anything that you can do about it. So having good default terms is crucial to your long-term success of your lending business. All right, so default, like I said, is when you violate your terms and conditions, and some things trigger that allow you to take control back when somebody goes into default. And some of the things that I have in mind are the obvious ones where if you go into default, then I can now foreclose on the property. I don't just get the property back. I still have to go through the procedures in my local municipality to make sure I can gain possession of the property back through a foreclosure or a judicial sale, whatever it is. And so it allows me to start the process to get the property back as soon as somebody goes into default. Some of the terms I like to put out there in my default is, I think it's really important that you hit somebody with a big stick when they go into default. And a mistake I see a lot of investors make and a lot of lenders make is that they have a very low default rate when they're lending their money. So if they're borrowing their money, let's just say they're borrowing your money at 10%, you should definitely be charging more than 10%. But let's say that you're borrowing they're borrowing money at 10%, but their default penalty is only 12%. Yes, do you get more money? Of course you do. But the difference between 10% and 12% on a $200,000 loan that's out for 6 to 9 months isn't very significant in relation to the overall deal and the overall property. So it's really important that your default rates hit hard. And some of the ones I like to use is 30% default rate. You got to check your local state rules, and you got to make sure that you're not violating any terms. You certainly can't do this with an owner occupied, but at a commercial loan, you have to have a default rate that really has some teeth. And another one that I like to do is I have a 10% penalty on the construction draw. So if you have a large construction project and the draws are still with me, and then you default on the property, there's a 10% penalty on the amount of funds that I still hold. And the reason I do that is because if I have to take the property back, I'm going to have to pay someone else to manage the flip for me. So it's going to cost more than we originally anticipated. So having some good, clear default terms is super important. All right. Another one that you don't have to do, that you need to make sure is in there, is that if someone goes into default, you don't have to give them the construction draws. Now, this is a bit of a catch-22 because if you don't give someone the construction draws, it's not likely they are able to complete the project, and so you have to manage that situation. But being in control of the construction draws, especially if it's a big construction, really can allow you to have some power over the situation and can maybe put some pressure on your borrower to get the project done. I did want to go over the things that I have in my what creates a default in my notes and deed of trust. First of all, I'll say that all these terms should be in your notes. They should also be in the deed of trust. They're in both places, but I just thought I would list off some of my default terms. If I don't name a default term that you like, put that in the comments. I'd love to see what you're doing that I'm not on my defaults. All right, here's the things that put a property into default on my notes that I think can be very helpful if you're a lender. Number one, if you don't make the scheduled payment. This is pretty obvious. If you're making monthly payments along the way and you miss a payment, then you're in default, right? So you can go and now you can start the foreclosure if someone isn't paying you back. The next one is the balloon date. I like to have my balloon date 6 months out. Some people like to have them at 9 months out. Some people like to have them at 1 year out. But I like my property to go into default as soon as possible. So if I want to gain control of the process, I can do so at the earliest opportunity. We'll go back to that meth house example. If someone's running a meth house on my property, I want to be able to go get it back as soon as possible. I don't want to have to wait 12 months. I'd rather go back and do it at 6. But if they don't make the payment back by the time the balloon payment happens, then you definitely put them in default. The next one is there's a due on sale clause. So if someone like does a subject to or something like that, that if they sold the property and they ignored the due on sale clause, and again that happens most of the times on a subject to, then you automatically go into default. If you don't have insurance, and this one happens a lot, most times the flipper will only pay a partial payment of that insurance. So maybe they pay 1 month or 3 months, or maybe they pay 6 months, but now the project is going on to 7 months. You have to keep up with that insurance and you have to make sure that builder's risk policy is in place. If it is not in place, then it goes into default, and hopefully you have in your note and deed of trust that you have the right to make that payment. The other one is property tax. If they're not paying their property tax, by the way, if they're not paying the property tax, they're probably not paying a couple other things, then they are in default and you have a right to start the foreclosure process, and you also have the right to pay those property taxes. I have a cross collateralization in my notes and deed of trust. Now, this only is relevant if they're making multiple loans from you. But the reason we put cross collateralization of if you default on one, you default on all, is because in a situation where that flipper maybe is getting into trouble, they'll make the payments and they'll make sure they don't go into default on the properties that have a lot of equity that are good deals, and then they'll allow themselves to go into default on properties that maybe don't have as much equity. So by cross collateralizing and one goes into default, they all go into default, so that even though they're making the payments on the house that has the most equity in it, you still have the opportunity to recover potential losses through the cross collateralization. So default on one is a default on all is cross collateralization. All right. Another one that I like to put out there is a secondary lien on the property. So I do not allow, without written permission, like if you call me up and there might be a situation that might be allowed, but in general on the note and deed of trust, you are not allowed to put a second position lien on the property. If you do so without telling me, then you are in default. All right. Another one is if you start the process for bankruptcy, or it goes into conservatorship, or a structural realignment in your company because things are problematic, that is a time where the property goes into default and you need to go in and take control of that situation. If your borrower is such in a situation where they're going into conservatorship or they're going into a bankruptcy, it is super important that you take control of that situation as soon as possible. And the last one I have on here that is really important is owner occupied. So if you need to make sure that you're clear in your notes and your deed of trust that this is a commercial loan for commercial use and you're not allowed to be an owner occupied. So I have had situations where my borrower either lied to me up front, I'm not sure what really happened there, or if they just kind of decided to move into the property halfway through it, but owner occupied is an immediate cause for default. And oh, by the way, you need to get on that one right away because you don't want ownership rights to kick in and homesteads to kick in. And you could be in a prolonged legal battle as a result of an owner occupied because because of Dodd-Frank, you're not allowed to have balloons. Your interest rate is really capped based on your state, et cetera, et cetera. So default is a safety net for the lender. And you need to make sure that you lay all these terms out and conditions out clearly in your note, as well as your mortgage and deed of trust. And default will allow you to get that property back in as quickly a manner as possible should things go wrong. So that said, don't be afraid of default. I, by design, allow my borrowers to go into default. I've talked a million times. I don't like to charge penalties. I like to give people the opportunity to just make the deal as we described. But I like to be in control of the situation so that if something goes wrong, I can take control right away. All right, my name is Rich Lennon. You probably need help with all your language on your notes and deed of trust as a private money lender. Unfortunately, I see a lot of mistakes. I see where people not much better than writing their paperwork on the back of a napkin occurs, and people come to me after there's a problem. I highly encourage you to come to me before there's a problem. All right, check me out, richlennon.com. Download the Smarter Wealth Blueprint, and this will really transform the way that you earn money as an investor and making sure that you are secured in your investment like you think you might be. All right, everybody have a great day.